Good evening, everyone. We're going to start shortly. All right, so welcome once again. This is the weekly webinar, week ahead with Religare Technical. During this webinar, we talk about markets, the performance during the week, what we are anticipating in the key indices for the next week, Nifty and the banking index, followed by some of these stocks which are looking upbeat or downbeat to us depending upon the market scenario, followed by a small feedback poll. And then we end the session with a Q&A. So using that Q&A button, you can ask your questions related to the webinar. No stock specific questions, anything related to any particular sector which benefits the larger audience, and anything related to the any part of the webinar that you'd like to understand in detail. So let's get started with the disclaimer first that the information shared during the webinar is only for educational purpose. It's not for a trading or an investment recommendation. So before making any decision based on the information shared, please check with your financial advisor. Now, talking about the benchmark indices first, it's been a phenomenal week. In fact, this is the sixth successive week that market ended in green, and like how both Nifty and Sensex made new record highs. Nifty tested a new milestone of 21,000 mark. So everything was like out of this pure steady uptrend that we have been observing in the markets. Across sectors, barring the defensives, were among the participants were in energy, banking, financial services, metal, and IT. They were the top performers. Talking about the top 5 gainers from the Nifty 50 basket, a sharp recovery in Adani group of stocks. So two top names, Adani Ports, Adani Enterprises, with gain of nearly 20 to 24% in these two names. Then we had Power Grid, BPCL, and SBI, which also posted strong gains. At the same time, since defenses were slightly on the back foot, Davis Lab lost 3%, HUL 1.5%. There was a modest cut basically in the rest of the counter like Bharti Airtel, SDFC Life, and Hero MotoCo. All right, so what to expect, after 6 weeks of successive up move? So, we have gained over 2,000 points now, because this rally has started around 18,800 mark, and we have tested 21,000 mark. So still, what is helping the index to maintain the positive tone is that rotational buying in the sectors, in the stocks which were not participating it earlier. We started seeing that it started with the banking, now it's cascading to the IT majors, which is helping the index to maintain the positive tone despite overbought reading on the daily charts. So what it indicates for the coming week as well, that we expect market to remain with a positive bias due to overbought signals on the daily chart. We might see consolidation the recent consolidation that we had in the last couple of sessions. But the tone is likely to remain on the positive side thanks to the rotational buying. So in the next week too, banking, IT, they are the two major sectors which one should keep a close eye on among the heavyweights. Broader indices, they might witness some profit taking the way they have ended the week. There's a possibility that we might see some profit taking or consolidation in the broader indices. But the other large cap names and major mid cap names still continue to be in rotational buying. So the focus should be on the given pockets. When it comes to the major support area, 20,550 to 20,300, we have a immediate support at this 20,700, 20,800 line also. But considering that we have already witnessed a very sharp move, so positionally, especially for the week time, this area close to around 20,550, which is closer to around this trend line support, which was earlier acting as a resistance, should act as a support now, and then this support area, which was the previous swing high area. So keeping that in mind, one should look for accumulation on dips. Upside 20,200, this red line that you are seeing at the top is going to be the first hurdle, and once we cross this mark, then 21,500 is also a possibility. So buy on dips for the index, but yes, since we have seen a very sharp momentum, one should be specific about the entry points and the exit points. Means keep on drilling your stop losses on rise. That is something we recommend. For fresh buying, for positional buying, this zone close to around 20,700 is going to be the first area of support, with 550 being the critical stop in case if you're initiating longs. Now, talking about the banking index. So basically, banking is definitely showing tremendous resilience despite the recent surge that we had, almost a vertical surge from 44,500 to 47,400 mark now. So private banking majors, they are leading from the front. We are seeing rotational buying in the PSU space also, but the major part is basically contributed by the private banking majors. The way it ended on Friday, we expect this hurdle, this 47,400 mark. It might overcome the same also in the coming week, and then 48,600 is something that it might inch towards to. So we are in uncharted territory. So basically, the upside is open. It's just that we have this immediate hurdle of the Fibonacci extension. So that might, result in further consolidation in case if it fails to hold above this level in the next week. Otherwise, this tone is likely to remain on the positive side. Downside 46,300, this area, and 45,700, somewhere between, will act as a strong support. So continue to look for buying opportunities on dips in banking space as well. And the preference should be given to the private banking majors. All right. So this is about both the indices. Now, what all stocks that one should keep on radar? So as we were discussing about IT majors also inching higher. So if you remember that at the beginning of this recovery or rally, we had this auto, energy, FMCG, all these names, metal counters doing well. Then the banking took over, and which triggered this momentum in the market, this momentum in this entire rally. And now we are seeing to support when the banking is not performing, other sectors are pitching in. So we believe that after a period of consolidation and underperformance, the private IT majors are likely to participate. And within the IT space, Infosys, which was trading in a declining channel, it made an attempt of a breakout, previously also, but it couldn't sustain. And then again, it retraced towards the supported zone of the multiple moving averages on the weekly chart. And after forming a small base, it has started recovering again. So we expect this recovery to strengthen further in the coming week. So among the IT space, HCL Tech, you always hear from me being the top performer. So that remains in the list. One can add the other name like Infosys and TCS to that list as well. Next counter, like banking, we are vouching heavily because they are holding this rally, and they are in fact helping the market to inch higher despite the overbought condition. Kotak Bank posed this breakout from the reversal pattern. This is inverted head and shoulder on the daily chart. Post this breakout, a decisive breakout, the stock also surpassed the hurdle of long-term averages. And since then, we are seeing this pause, this 3-4 days of consolidation, followed by a strong candle on Friday. So we expect this recovery to strengthen further, and like Axis, ICICI, SDFC, they all have done well. Now we expect Kotak also to pitch in and inch toward 1900 plus, means 1980, 2000 levels plus zone in days to come. This is one such stock that one can look for fresh long positions. Lastly on the list, Z Limited. So Z, if you see on a broader time frame, means on a monthly chart, you'll see a downtrend. But what we are observing now that post this recovery, from 170 levels to 270 levels, we are seeing a bit of a consolidation. This area basically. So this area as resulting in a formation of a handle, means basically a pause wherein the bears tried to push the stock lower, but they couldn't. And this zone 245 to 40 is acting as a strong support area. After every retest, around this area we've retested that level, then this, we are seeing the buying interest emerging, and now we are trading upper closer to the upper band of the same. So possibility of a breakout in Z seems higher in the coming weeks. So one can look at Z also for the long trades. So net just to sum it up, after 6 weeks of up move in Nifty, we may continue to see some consolidation in between time-wise correction. That is what we call, wherein the price remains steady, but it's hovers in a range. Why? Because rotational buying in the sectors like banking, IT, energy, and selectively from the other space is helping the index to maintain the positive tone. So this tone is likely to maintain 21,200 immediate hurdle, and then 21,500 is what a Nifty can aim to. Banking looks comparatively stronger as of now. 47,400 is critical. Above that, 48,600 is something that might head to. Preference private banks. Among these stocks, we talked about Infosys, Kotak Bank, and Z, all on the long side. So this is all from the presentation part. Now we'll have a quick poll. So please fill in your feedback, and then we can start with the Q&A. Please quickly fill this feedback so that we can start with the Q&A. And if you are done with the feedback, you can start posting your questions. Use that Q&A tab on the front of your screen to post your questions. All right, so let's start with Q&A now. We have enough questions in queue. Okay, so there's a comment. Sorry, I couldn't see during the presentation that can you speak in Hindi? Mr. Lalit Joshi mentioned. So, Mr. Joshi, basically we capture the essence of this webinar in a small video, which we post on our social handles across the Religare online platforms. So you can check the same on Saturday evening or Sunday morning, wherein we talk about all this which we have discussed, during the presentation in brief and in Hindi. Okay, so the next question, a question from Mr. Avik Ganguly, that what is rotational buying? So rotational buying is basically a term used when one sector, take a breather, take a pause, and the other sectors, try to fill in. So just to give you an example, that for last couple of days, we were seeing that FMCG counters or energy counters, metal counters, they were doing well. Uh, Yesterday, it was banking which was on the back seat. Today, what happened is that it turned out to be otherwise. Banking, IT, they were on the front seat, and the others were sitting on the sidelines. So this is what we call rotational buying. That one take a pause and the other, takes over. All right. So next question from Mr. Subramaniam on finance and power sector. So largely, see, banking and financials, they are trading in tandem. Yes, it's not that broad-based buying that we are seeing in the NBFC space. We are seeing selective buying, and it might continue for a time being now, considering the recent choppiness that we had in the NBFC counters across the board. So I guess private banking majors plus select names like L&T Finance, Chola Finance, Shriram Transport Finance. These are some of the names which one can look at from the finance basket. Power sector, as like last time also we discussed about that, it looks slightly overheated now after the recent surge, though we are not seeing any sign of slowdown yet. But one needs to be cautious. When the markets are at the record high, the stocks are resuming like anything. If you are very disciplined, if you are very strict about your stop losses, how to manage your risk in case if something goes wrong, then one can look at the power counters. Like Tata Power have made a new record high of late. NTPC is trading at the record highs. So any dip, any consolidation can be considered as a buying opportunity, but with strict stops. Stock specific questions. See, we have a limited time. What we have thought of this when we were conceptualizing this entire interaction is that we'll end the entire session in 30 minutes so that people have other important things to do post this webinar also. And we are not getting into the individual stock specific queries, because at times we have 5-6 stocks on an average in person's portfolio which are sitting on the sidelines and they want to have a view. So it's going to be a very lengthy session just because of the Q&A. So anything related to any particular sector that can help your position, definitely we are here to answer. Okay, so Mr. Ajay Kulkarni have a query about specific stock. I'll talk about the sector just to give you an overview that OMCs, they have done exceptionally well. Means they are still, again, trading from strength to strength. Please don't go short. If I'm saying that certain segment looks overheated, doesn't mean that one should go short. The idea is keep on trailing your stop losses. Trailing your stop losses means if the stock is at 100 and your stop loss is at 90, trail your stop loss to 95 once it goes to 105 levels. So this is what the trailing of the stop losses means. For fresh buying, since we have hardly seen any pause in the OMC stocks, entering fresh here seems not a prudent strategy because the stop loss risk to reward is basically not favorable at current levels. Okay, so Mr. Jay Joshi has questions around this life insurance company. So again, we'll talk about the sector. So as a sector, we are anticipating the positive tone to continue, and selectively we are seeing certain stocks doing well for any particular reasons. But broadly, we expect this sector to lead, continue to maintain the positive tone. And SBI Life, SDFC Life, they are the top performing names within this space. Again, see, I'm requesting please not to post stock specific queries, please. Okay, so Mr. Prakash, we are not covering the commodity market in this webinar. It's only for the equities. For separately, in case if you're associated with us, you can check with the team directly. You can call the branch, your business partner. They will connect with us and they'll provide you the answer. All right. So, Mr. Chandan Singh, I guess you've joined late. Yes, we are anticipating the banking to continue this rally, 47,400. That's the immediate hurdle. We have almost tested that mark. And the way we have ended on Friday, there's a possibility of a gap up on Monday. So above 47,400, there's a possibility that 48,600 is the next probable area where banking index might hits to. Mr. Mohammed Naeem, we are not recommending any buy sell. That I've shared at the beginning of the webinar. That the stocks that we have shared are the positive patterns that are visible on charts, and based on that we have shared our observations. So these are observations basically that Infosys, Kotak Bank, Z, they are likely to do well, but it's completely your own discretion whether you want to buy them or not. Okay, others are stock specific queries, so that I've requested. So please avoid those questions. Anything related to any particular sector, we are here to answer. So again, I just want to reiterate our preference so that it benefits you in the next week, that all sectors basically they are participating in the move, on the rotational basis. But we feel that IT still have potential to do well. Banking, private banking majors, we are seeing strong traction continuing. There could be intermediate pause or consolidation, but the overall tone is likely to remain positive. So these are the two sectors definitely one should keep on their radar, alongside with selectively from the other sectors. Barring defensive, though they are also participating selectively, but yes, they might sit on the sidelines, because I was anticipating FMCG also to do well, but with slide in ITC, HUL, it seems like they are not in a mood to participate as of now, and they might go under consolidation. So avoid FMCG, avoid select pharma counters which are not participating, and yes, avoid underperformers. And just to add to what we've shared in the beginning also, that the broader indices means mid cap and small cap. I understand that due to the absolute value, at times we get attracted to any stocks which is trading below 10, 20, 50, in anticipation of a strong move. So in case if you're doing it in a market like now, wherein the index is the record highs and there's hardly any pause in the broader indices, be very strict with your stop losses, because in case if the stock gets stuck in your portfolio at these levels, it might take months to recover. And then that is what is we generally observe in the mid cap and small cap space. So be very specific in the mid cap and small cap basket. So this is all for the presentation. And okay, so we have more queries on the sectors. Okay, so EV space, Mr. Jai Joshi, we don't have any, as such, means outright place when it comes to the auto sector. Everybody is basically now are into this, EV field. Tata Motors is anyways doing well in that segment. But if your view is, let's say, for 4 or 5 years, then it makes sense to look from that point of view. And as of now, I feel that within this sector, almost all the stocks are doing well. But if I have to choose any on the basis of this particular segment performance, then it should be Tata Motors, based on their initial edge that they have. No stock specific questions, please. Okay, next we have question from Mr. Krishnamurthy on large NBFCs. So again, we have discussed this earlier, that it's a mixed trend that we are seeing in the large NBFCs. So be selective, like Chola Finance, Shriram Finance, select gold counters, gold rated NBFCs. Then we have L&T Finance. These are the names that one can look at and avoid others. All right. So yeah, with this, we have answered all the queries. Please excuse me for stock specific questions. so that we can end the session on time. So yeah, with this, we have answered all the queries. Thank you everyone for participating. Next week, same time, we'll connect again. Thank you.